Hi everybody, Marco Carbajo here with businesscreditblogger.com. Today's blog post, we're going to talk about small business compliance and how it affects your ability to obtain business credit as a company. Now, as you know, you've probably heard me talk about lender compliance, but when we talk about small business compliance as a whole, there's three main areas as a business owner, whether you're a startup, whether you're a small business, medium-sized business, or even a large business. There's different areas of compliance that will impact all aspects of your business, from operational to the ability to get funding, and also your ability to even operate legally as a business. So the three main areas that we've broken down to in this particular blog post and in this video is there's what we call corporate compliance, there's regulatory compliance, and lender compliance. So first and foremost, when we're talking about corporate compliance, we're talking about when you structure your business as a corporation or as a limited liability company. There's different things that you need to follow in order to keep that company in good standing. As a corporation, you need to file, of course, your articles of incorporation. You have directors, shareholders, but then you have your meeting of the minutes. You have your record keeping that you have to keep up with, filing your tax returns. There's your annual report filing. See, these are things that you need to do on a consistent basis to ensure that your company is in good standing with the state, as well as there's additional rules and regulations like does your business need a business license, etc. So that's your corporate compliance. The second aspect is regulatory compliance. Now, these are more of the if you have employees or if you have a particular type of industry you're involved in, there's certain regulations or permits that you may need. So this is to ensure that you as a business, you have your corporate compliance intact, you have all the necessary permits and licenses for regulatory compliance. Even if you're a technology company, there's certain types of regulations and security measures you have to take if you're accepting credit cards, etc. The third and final is what we call lender compliance. And lender compliance, which we outline in our business credit building system in detail, is how to meet lender compliance. These are, in addition to regulatory and corporate compliance, there's also additional things as a business, which is called lender compliance. So when you apply for credit, whether it's with a supplier or a bank or a lender, whether it's a traditional line of credit or a non-traditional line of credit or vendor-based credit, banks and lenders and suppliers will do different types of checks to ensure that your business is in compliance. They may check to see if your business is in good standing with the state. That's where we're talking about corporate compliance. They may check to make sure your business has the right licensing that it needs to operate. So that's your regulatory compliance. Now, that with lender compliance, they may check to make sure that your business has a commercial zoned address as a business, or it's listed in the 401 business directory, that you have a business phone line, or even they'll check your online presence to make sure if your company has a business website, an online presence. So there's all these different things. And in our business credit building system, which is businesscreditbuildingsystem.com, we actually go over all these things to ensure the lender compliance, that your company meets these criteria before you start applying for credit. And in our system, we actually lay out the vendors, credit sources, what they actually look for to apply for credit as well. So with that, enjoy today's blog post. For more information, subscribe to our YouTube channel, and be sure to check out businesscreditblogger.com. Make it a great day. We'll talk to you real soon.